Was really good. Was really good. We're back at it again. If you're in the Instagram, Discord, etc., you would know that we just finished another month, end of month for myself. So at the end of every month, from a certain day to the next month on that exact same day or around there, I just calculate everything, the amount of trades I took that month, profit number, etc., etc. Obviously, within the Discord, the past 2 months that have been spoken about in terms of my end of month numbers because all my social platforms are relatively recent. So, you know what I'm saying? Finished with the Discord. Also 90% win rate because all the call outs that I do are the trades that I take. Rounded up 90% win rate. We went 19, had 19 wins and 3 losses. So a total of 22 trades, and 19 of those trades were won. Only 3 of them were lost, which is still absolutely great, consistent. Love it. All glory to God. And then obviously it's going to play within myself as well, because again, those are the same trades that I take. And yeah, students will be killing it as well. Probably either right now or later on the video if I bring something up here. Just everyone else is trades in the Discord also just absolutely killing it within their own personal trades and the trade that they take based off the signals and callouts that I do as well. And yeah, but yeah, join the mentorship. You can learn to do the same stuff. You feel what I'm saying? But to the video, just gonna be talking about going over everything that I did that helped me, that added on to just helping me overall obtain the 90% win rate again. Just like last month, keeping that same consistency, etc., everything that I did, whether that's mentally and physically on the charts, and a few other things that I've learned recently, especially switching to options trading, which I've been doing for the past 2 weeks. Still trading my index markets, but as you see here on TradingView, we got some just regular stocks as well. But yeah, let's get straight to it. So understanding the big primary liquidity points, especially related to the overall direction and just manipulation towards whichever side. That's what helps out in terms of picking which primary liquidity point the market actually wants. So within NAS 100, we opened up, big bullish. Obviously, NAS 100, which I plan to more, is going to relate to QQQ. And yeah, manipulated bullish. I'm already thinking, all right, we're going to have a buy side day. And guess what was above? Big liquidity points. So manipulation kicking in at 8:30 within NAS 100, and boom, spiking up to the buy side. I already knew we're probably going to continue going up to the buy side because we have tons of primary liquidity to the buy side. Simple as that. Old daily highs, so daily highs from previous days, weeks, months that haven't been swept. Old 4-hour highs that haven't been swept neither, and maybe some standard liquidity points, which is just going to be your basic lower highs and your higher lows are standard liquidity points, the basic liquidity points. So like down here, these are going to be like standard liquidity points, it's just standard higher lows. And then right here, your basic liquidity points, standard liquidity points are going to be your lower highs. Before we shift to the next thing, I'll show you again. So what I mean by big liquidity points, so daily highs and daily lows, I don't just mean the previous day's high and low. So today's Saturday, obviously markets are closed. So when I'm talking about the daily high and low, so to the previous day, I'm not talking about just here. Sorry if these lines aren't straight, but you get the gist. I'm not talking about just here and here to look at. So when Sunday comes, market opens, I'm not just focused on the previous day's daily highs and lows, because those are in a closer area that price could actually get to and sweep within that day. But the thing is okay, now I need to figure out where else could price probably most likely go. As you can see here, price has been big bullish here, and then finished off bullish Friday. All right. So we can also tell that we also have relative highs. So highs that are in a relative area that price can get to. So this daily high right here, that day, that was never swept, point blank period, and is in a relative direction, a close enough area that I can expect price to also possibly sweep out. And then same thing with the daily lows. We're gonna mark out right here. So we're not just marking out, because I had to, because I didn't really mention it that well in the video on the primary liquidity points, but I had to mention it to a couple of my students just personally within the mentorship in the Discord. But we're not just marking out the previous day's daily high and low. You feel what I'm saying? We are marking out the previous day's daily high and low, and we're marking out the relative ones. Because if I see prices pushing up big bullish, and guess what? We have the previous day's daily high there, and it keeps on pushing further past that daily high, meaning it's a continuation. Unless I chart out the fact that there's also another old daily high or old daily low in a relative area, I'm not going to know what to do. Crap, my camera froze. I'm not going to know what to do, and I'm not going to have the right confluences in terms of getting into a buy position now, because clearly price doesn't just want this previous day's high. It wants the old daily highs as well, or ODH or ODL is what I'll call them instead of writing it all out. So ODL, old daily low, ODH, old daily high, et cetera, et cetera. So if price, if market opens up Sunday, it's pushing up, okay, it's giving big bullish. I'm thinking, all right, it's going to go to that daily high, and it most likely is. All right, let's say it doesn't reverse, it just keeps on continuing. Guess what I have marked out? An old daily high. So the more that I see that it's clearly having a continuation, is going to keep going up. And guess what I know is right there? Another big primary liquidic point. I'm going to look to enter in a position within that direction, because clearly price didn't just want that primary liquidity point. That wasn't the only primary liquidity point on the hit list. There are more primary liquidity points on the hit list to the buy side. And then eventually, once price has got everything that it wanted to sweep within that day or within that week that was on the hit list, eventually it's going to reverse and then sink down to the lower liquidity points or go up to the higher liquidity points, whatever is next on the hit list after getting a certain amount. Now, moving into the second thing, which has just been a thing that I've been using for the past like 2-3 months, is overall just inverse fair value gaps. Inverse fair value gaps. The first time I saw it, I was like, that's cool and all, but I thought it was going to be like, something really hard to find, and it was just going to be a complete pain. And again, I'm not a big fan of fair value gaps, point blank, period. But the more I started seeing them, and the more I started seeing that they worked, that how they were working, and then taking the trades based off of that, that's just been like an extra confluence. So we can go, so like right here, we had a fair value gap inverse right here. Boom. Moment it inverses it, that's when we're going to enter. Now, some people will think, oh, the moment it breaks it, like the first time when I started trading them, granted, they still worked out in my favor because eventually they actually disrespected it. But majority of people, because I used to be one of them, the moment it breaks it or pushes past it, so like it did with this big bearish candle here, or like this bullish one right there, that's when they entered to the trade, because, oh, it broke the fair value gap and disrespected it. No. Price has to close above, in this case, or below, let me find one. All right, so like here, within this area, this was a big bullish candle that formed the fair value gap. Price has to close below in order for that to be disrespected. And the moment it does that, you can enter into a sell position and stop loss wherever you feel comfortable in putting it, whether that's super high up or just right above the fair value gap, because it's more likely to reject after the retest, and then hold TP till price shows you that it's not going to continue going, and then just capitalize off a small move just like that. And then vice versa, you need to wait for price to close above this type of fair value gap, which was formed by a big bearish candle. It needs to close above, fully disrespecting it. Because even if price breaks the fair value gap like it did with those candles, but the candle doesn't actually close above, it closes with a wick outside of it, but the body's still within it, that's still considered a respected fair value gap. Meaning that unless it breaks it and closes above the actual fair value gap, the actual body, then it's not considered disrespected, and you shouldn't be entering into that trade until it is. And then boom, does that here, boom, you could have entered in right there, stop loss, wherever you want to put it, and then TP at the next key level. Let's just say there was a demand zone within that area. Absolutely beautiful trade. Shmanyan, just like that. Now, not only was I using the inverse fair value gaps and been using them just to add on to that have been a lot more helpful in terms of the understanding it, seeing it, and going through with it. It wasn't just strictly, oh, it inversed the fair value gap, disrespected it, did all these things. It was also, again, the big liquidity points. Market wants liquidity and it wants balance. It already filled in balance. with the huge gap within the candle. And in this case, it also disrespected it. And then in this case, guess what? We also have big liquidity points, old daily highs over here. And then we also got, or old daily highs, old 4-hour highs over here as well. And then probably more from previous days, et cetera, because it pushed up even further past than this high over here. So seeing that we have big liquidity points within the area, price filling imbalance, and inversing fair value gap, I'm in that. I am in that trade. And that's how you build that confidence. That's how you have that confidence, is having those confluences, the correct confluences that are based off of what price actually wants. So not only was balance filled within the thing, but we also had an inversion within there. And we also know that there are big liquidity points above. The fact that price didn't respect it and it inversed it, and we also have big liquidity points above it, lets me know that, okay, price clearly wants to start pushing up and it wants the big liquidity points above. Therefore, we are going to get into a position and we're going to take advantage of the manipulation that the market is putting in right now to this said direction. And we're going to capitalize off of that, whether that's within a small move or a big move. Again, shove it in your freaking brain. The market wants balance and it wants liquidity. The moment you see it disrespecting certain things that it shouldn't be disrespecting, especially like market structure, et cetera, use that to your advantage, add that to your confluences, and even if the trade starts to look a little iffy, remind yourself what the market wants and that you know what the market wants. Therefore, you are not going to let them play mind games with you and screw you over. And guess what? If you do get screwed over, it is what it is. You learn from it and you move forward. Simple as that, all right? Like I even mentioned with the last video, the actual last video, just with the whole mental aspect. Trading is 80%, I'll shoot to say more than 80% mental and psychological, and 20%, if not less, the charts. Again, it is not that hard to understand a strategy. It's not that hard to realize, oh, prices broke this thing and woo. Oh, prices did this, etc. Oh, prices rejected and is giving me momentum in the opposite direction. Learning your strategy isn't the hard part. It's the mental stuff. Not being able to remind yourself, not having the right confluences, especially with a trade like this, will cause you not only to miss out on beautiful opportunities, but get screwed over with the wrong opportunities. And by expanding your knowledge within the market and expand the knowledge primarily within yourself and your mental and your psyche, expanding that will overall flip the switch. You will move completely differently in the market the moment that you focus on those specific things. The moment that you constantly remind yourself, regardless of what's going on, the market wants these things. Honestly, for myself, especially with these past 2 months, realizing to the fullest extent what the market actually wants, and then understanding that, okay, not only does the market want liquidity, it wants these huge liquidity points, the big liquidity points, the 4-hour highs, lows, daily highs, lows, old ones, etc. Me acknowledging that and implementing that into my strategy is what's been turning my consistency up to the freaking roof. And I give all glory to God with that, because ain't none of this done without him, point blank period. You feel what I'm saying? But, being aware of that, reminding yourself of those things, and overall, even if stuff doesn't work out, it is what it is. It's a business expense. It is what it is. You feel what I'm saying? You just got to learn from it and move forward. That's what determines it. What determines how you move further within your trading journey is how you receive your losses and receive your wins, but primarily your losses. How you receive your losses, how you perceive your losses within just mentally, how you observe it and how you see it, is going to determine if you're going to be a successful, profitable trader quicker or eventually, or not at all, and just constantly giving all your hard-earned money to the market. If you cannot consistently take your losses as, okay, it is what it is, I did everything correctly, this is just market manipulation, market BS, and it's a business expense, stuff happens. Or you look at your loss, okay, I shouldn't have done these things, I shouldn't have been trading because I got this going on, etc., so that's on my behalf. I'll make sure that the next time I take a trade, these things aren't playing into factor that could cause me to lose a trade and make a stupid decision like I did with this loss. If you aren't looking at your losses like that and can't look at your losses like that and find it impossible, if you cannot fix that, then moving forward in the markets is going to be a lot harder and a lot longer. Again, most of these people aren't spending 4 or 5 plus years in the market because, oh, it's so hard, the strategy and woo. No, they spend all these years in the market with no profitability, no success, no nothing. And that's all due to the fact that they aren't able to view their losses in the correct way, and they're not able to improve from their losses in the correct way, and they aren't able to build a better mindset and mental and psyche within trading. That's what's causing the 95 to 99% of traders to fail and not succeed. It's because they continue to do the wrong stuff, focus on the wrong stuff, think about the wrong stuff, and view the right stuff in the wrong way. So the moment you could flip all of that is the moment that you'll see a complete switch in everything. But yeah, again, finish this month with a 90% win rate again, especially within the Discord. Discord's been open for the past 2 months, and the past 2 months have been 90% win rates. A total of 16, so a total of 38 trades. Camera froze again. My goodness. A total of 38 trades, I believe, within the past 2 months. I only took 16 the first month within the Discord, and I took 22 this month, so 38, I believe. And 38 wins and 38 trades, and only 5 of them were losses. So 32 for 38 past 2 months, not bad. I only took 5 losses in the past 2 months. All glory to God, all blessings, just beautiful. So you want to join the Discord? I got my stuff, you know what I'm saying? It'll probably be in the link in my bio, most likely in the description. Just go there with the woo. Whole bunch of sections for anything, whatever you want to talk about, etc., etc. It is free. I'm not about to charge anybody money to get my signals and trade callouts, especially if I take a loss. That's just stupid. Doesn't make any sense. So that's all completely free. Just take those at your own risk. Mentorship, still got 2 free hour-and-a-half sessions. So, in terms of you want to learn more, you want to speak to me in depth, you want all this to be taught to you one-on-one, in person, and in depth, at least use those 2 free hour-and-a-half sessions. All right. And everything else after that is extremely cheap, like cheaper than a Netflix subscription. We'll say that. You feel what I'm saying? Because I want to help everybody out. I want to serve everybody as I should. And yeah, but God bless y'all. I will see y'all next Saturday with a video. We're going to start up a new month, Monday. And yeah, you can like, subscribe, go to the gram, whatever you want to do. Just trying to help some people out. I'll see y'all.